Welcome to Employee Termination Tips. My name is Christopher Neufeld of Neufeld Legal. And in this particular video, we'll be discussing some of the key indicators that might well indicate that a salaried employee in Canada has not been paid the proper amount of vacation pay that they are due. Now, the first indicator for a salaried employee is that if they look at their pay statements, and especially their year-end pay statements, which represent a cumulative, but looking through all the pay statements for a particular year, if there is no specific indication of a separate payment of vacation pay, that is a very strong indicator that vacation pay has not been paid. Because in many of the provinces, the employment standards legislation is exceedingly clear in that vacation pay must be separately broken out and listed on one's pay statement. Also, the way the arrangement works, subject to contract, but even there with contracts, oftentimes these contracts are improperly drafted and a contradiction of the employment standards legislation of the province, is that there are requisites with respect to timing and payment. Simply because you've got days off for vacation and your pay continues under a salary, that is not sufficient. There has to be an actual vacation pay payment, and that vacation pay payment must be laid out in the pay statement. Otherwise, there is a very strong possibility, subject to further review, that that particular salaried employee has in fact not received their requisite vacation pay for that year, and in all likelihood for all those years that they were under salary. Now, a second indicator is that you find out that there is a vacation pay payment that is recorded in the pay statement. But when you look at the vacation pay in the pay statement, oftentimes usually a couple lines above, you'll see another number that corresponds to the exact same amount and is a negative amount and represents a negative subtraction from one's salary for an equivalent amount to what is being paid in vacation pay. And once again, this is a permissible structure oftentimes for accounting purposes and payroll purposes in the United States. We've gone through this in other videos. But being permissible in the United States does not make it permissible in Canada. So what happens in effect is that this payment, and oftentimes one's general holiday pay, also known as statutory holiday pay, is subtracted from the salary. So that a person who might well have, let's say, $100,000 salary that they've agreed to with their employer has a total of $10,000, $6,000 in vacation pay, $4,000 in general holiday pay that is consistently subtracted for every day, for every week that they go on vacation or have a holiday from their salary. So what is the net effect? Well, the net effect is that at the end of the year, that particular employee has only received $90,000 of their $100,000 salary. Yes, they might well have netted $100,000 because they received vacation pay of $6,000 and they received a payment of $4,000 in account of general holiday pay. But those payments were supposed to be paid above and beyond one's salary. The contract was for $100,000. There is no basis within the employment standards legislation to discount those amounts. Yes, you can discount certain items, such as when the employer pays on your behalf the amount that's due for federal taxes, provincial taxes, CPP, EI. But you cannot take that one step further and proceed to make a discount as against vacation pay and general holiday pay. There are possibilities that the contract was sufficiently well devised to allow this. Those situations are few and far between and are also subject to very difficult scrutiny under law, where the courts are very much more favorable to the employees than they are to the employer. Now, take into account those two situations. Let us say you do see vacation pay and there's no subtraction from it. And you say to yourself, is there any indicator there? Well, one of the indicators you might still see is in certain provinces in particular, but what you see is if you look at the payments that are paid on a per day basis, and if the amount on a per day basis is the same under your base salary as it is under your general holiday pay, as it is under a vacation pay, if all those three numbers are the same, it is quite likely that there is a miscalculation going on. Because that, again, is a structure that is permissible in the United States, because then it's based on contract and not provincial employment standards legislation or federal labor code. But that is not how it works in Canada. The computation that exists for vacation pay is actually slightly higher, oftentimes, especially in a province like Alberta, than it is for general holiday pay. And general holiday pay and vacation pay are almost always higher than what they are for a single day's pay on base salary. So if those three numbers are the same, then what you're looking at is you're looking at a very strong possibility that, once again, there's a miscalculation occurring, that there's a basis for challenging that. And if there's a basis for challenging that one aspect, and again, you have to go and scrutinize it, advisably go with a lawyer who understands this payroll stuff, but then there are more likely than not other issues with respect to your payroll and with respect to your termination severance. But it is a matter of looking at these indicators, these three indicators: an absence of vacation pay, number one. Number two is a subtraction of the comparable amount of vacation pay and or general holiday pay that is being paid out from one's salary, so that you don't get the full salary at the end of the year. And number three, a lack of divergence as between how much is paid in a single day for salary versus how much is paid for a single day of statutory holiday pay versus how much is paid for a single day of vacation pay. When those three numbers are the same, there is a very strong likelihood that there are errors and miscalculations occurring. And I'm not going to say this is always going to be the case, and it's always going to be successful. Remember, we in fact have, I believe it's 14 different provincial and federal employment standards legislation that exist in Canada. So we got variances from province to provinces. And we got courts who have articulated different positions, often, in my opinion, some of them incorrect, or it's oftentimes the government who has been incorrect in this articulation. So before you jump into this, and this is why you actually look at it, and we explain this because of statutory deemed trust, why you look at it only when you effectively, or challenge it, once you've been terminated, you quit your job, you get fired, because then you don't have the repercussions of losing your job because you challenge miscalculations. But it is only then that you start looking at it, and then you still need to get sage legal advice from somebody who understands employee payroll in your particular province. Because what have we been seeing, especially in the province of Alberta, is there are far too many miscalculations. There's far too much reliance on payroll systems that are outside of the province, and in particular, they're developed by the United States, and they don't make the changes from the United States to conform to the province of Alberta. This is problematic. The employers don't mind it because it saves them lots of money. Nobody's made them wiser. Nobody's challenged them effectively. But these are inconsistencies. Everybody focuses on the termination severance, and they don't focus on the payroll. And fortunately, you're able to focus on the payroll even years back, more than this Limitations Act that you hear about, because there's protections oftentimes by statutory deemed trust within the employment standards legislation that protects the money that you've earned. But once again, this is stuff that you need to be talking to a lawyer about, so you properly understand it, and the lawyer can properly explain it, they can analyze it, and they can give you proper assessments as to where you stand. Because what you take from these indicators is that there's far too much vacation pay that is due to salaried employees that is not being paid to them in Canada. And it's shocking when you realize how much it is and how significant it is. And you have legally earned it, but for the fact that your employer has not engaged in the strict conformance to employment standards legislation and thus has not paid you that money that you are deserving of. Because the fact of the matter is, you're in Canada. You're not in the United States. So you can't simply get paid according to American standards. You have to get paid on the specific employment standards legislation that governs where you work, be it the province or the federal level. And that's how you have to be paid. When it's being done wrong, when you depart your job, whether it's by termination, firing, quitting, permanent layoff, you need to address this. You need to look into it because you've earned that money illegally. So if you've earned money illegally, you are deserving that money. You should be able to retrieve it. And that's what we look to do. Thank you.